me get the recording started here, and then I'll turn it over to you. Let's see. The last session, my broadcasting on our closed Facebook group wasn't working, but I'll test it again and see if I can get it working this time. Let's see. One second. Still giving me an issue. All right, that's okay. I'm going to go ahead and turn it over to you, Cliff. I know a lot about Cliff, and I don't know where you want me to focus as far as your background is concerned, but I will tell you that Cliff is a wealth of knowledge. He is actually one of my business coaches personally for me and a lot of my entities, and has helped me in many different areas. And one of his focuses right now is on opportunity zones moving into 2019. So, Cliff, take us away. I will be in the background in case you need me for anything, and then I'll host the questions and tee them up for you at the end as well.
Thank you, Dan. First of all, we want to thank Dan for putting this conference on. Any of you have done anything similar to this, it's a big exercise, and a lot of this Dan is doing out of the goodness of his heart, and we thank him for that. Well, the opportunity zones, I started getting interested in it because one of the things I do is I help companies sell their businesses. And obviously with the opportunity zones, you can take what you would pay in capital gain tax and put that toward an opportunity zone instead of sending it to the government. And for instance, we just had a major transaction in December, November, and October. And I would rather these entrepreneurs who are selling send their check to help an opportunity zone than send it to the government, which, by the way, is shut down right now. So even more the reasons. But, what we wanted to do was we had about 550 entrepreneurs just like Dan in our portfolio. And one of the things we pride ourselves on is giving them the advice that they don't have time to do. And I think looking at opportunity zones, you have to say two things about them. One is it's a very valid investment opportunity. It is real, but you also have to say there's a lot of ands, ifs, and buts. And it was exactly the example of two sides of the political spectrum coming together, and both sides are a little bit skeptical of each. And they came up with a lot of rules around opportunity zones. So we're going to get into that a little later. But what has come up also, and I'll give you a live example. About 2 years ago, I had a business, a retail business with multiple shops call me and said, we're ready to sell. I went out there and we looked at it and we looked at what they were looking for. And I advised them that I didn't think we could get there. The last thing you want to do is go to market and not be able to reach the price you want. So they said, fine. But then in latter part of December, early part of January of this year, they called me and said, Cliff, we're getting 5 letters a day of people wanting to buy our business. And it's different than the 1 or 2 letters we get a quarter from people just sending out a mass cookie cutter email. These people, it seems they're really interested. What is going on? So I said, well, let's check it out. So we went out there and I met with them, and we went down to the county government, and lo and behold, we discovered their business is in an opportunity zone. And that's why people were interested in the real estate. In fact, the McDonald's next to them was in the opportunity zone, and it just shut down overnight. And what happened is the hedge fund bought them, and the profit they could make on the real estate now was more than they could sell hamburgers for the next 50 years. So Dan, one of the things I'm looking at the opportunity zone is not only as a real estate investment, but as a business investment. And I'm talking with hedge funds in New York right now and saying, you should look at this not just shutting the McDonald's down, but this could give you an opportunity to make money instead of it just being dirt and being a rehab project, which all that goes along with the opportunity zone. You could buy businesses, keep running the businesses until there's a strategic opportunity to execute the opportunity zone. And this business model is very similar to Brewster's Ice Cream. When you go to Brewster's Ice Cream and buy a franchise, they don't tell you you're going to make a lot of money selling ice cream. They will tell you you'll make a little bit of money selling ice cream, but they help you find a desirable real estate location where they say if you sell that ice cream for 20 years, in 20 years you can sell the real estate and make $1 million profit. So they are really a real estate company posing as an ice cream company. So this is kind of similar, I think, where the opportunity zones are and what businesses are located in the opportunity zone. So, you got two ends of this now. You got the entrepreneur who is owning the business. What should they do? For instance, my friends that are over at the retail shop. And then I've got hedge fund investors that says, yeah, we will buy that property tomorrow. And now we've entered discussions with potential real estate investors. Well, why the business is making money. You should continue to run the business and execute the opportunity zone when it's desirable for you, and gives you time for planning. Now, the reason I'm encouraging them to do that raises the property value more for the entrepreneur who owns it, and it gives the investor an opportunity to keep running the business and make profits that way. So we're extending the opportunity zone now to include entrepreneurs. And what we're doing, we're finding every business location that's privately owned and coming up with a listing of those, and then look at those and say, which of these could be a sustainable business and which should probably do like the McDonald's just decided to shut down overnight. But we've already entered negotiations with a potential hedge fund to buy the business, which without the opportunity zone, this hedge fund would have no interest in this company. With the opportunity zone, they're saying, okay, we'll sign a 3-year contract with the entrepreneur to keep running it. We'll buy it and we'll keep running it, and it will be in our portfolio. So this, Dan, I believe, solves a lot of the mystery around opportunity zones and the ands, ifs, and buts, and gives the real estate investor some time to look at and see how they're going to execute their strategy. And for the entrepreneur who's in the opportunity zone, this particular business we would not have brought to market and would not have gathered the price that they wanted. But, with the opportunity zone, we're right at, in fact, we're about $200,000 over what they wanted 2 years ago when I told them it probably wouldn't sell for that much. And in fact, I knew it wouldn't. So this opportunity zone now is not only a great opportunity for real estate investors, it's for entrepreneurs. And in part of the deal we're negotiating with the hedge fund is when they buy it, guess who's going to invest in who's going to invest in the opportunity zone? The entrepreneur who is selling. Husband and wife said, yeah, you know what? We will invest in your opportunity zone for the amount of money that we can on our capital gains tax. So this is a win-win-win. And in my career, that's the only time I see it works out as a slam dunk. If you want to see a slam dunk, you got to have a win-win-win, not just a win-win, but a win-win-win. And we're seeing the opportunity zones do that for entrepreneurs and having them an exit possibility that would not have been there without the opportunity zone. So that's what I'm going to share with you all, Dan, as real estate investors, is you should be finding entrepreneurs and going to them and saying, it probably won't work most of the time like the McDonald's that just shut down overnight. But if you can work out a deal where the entrepreneur can stay on and they can get their money and they can exit and you can get the opportunity zone, then you'll have time to execute the rather meticulous rules around the opportunity zone. So, Dan, we are compiling all this information right now in light of the entrepreneur exit. That's another facet here that gives us some to compile the data. But it is a really good thing. And I think, again, it's a win-win-win. So that's what I want to open up. If anybody has any questions on that, I'll be happy to take them. And, we're learning as we go here on the entrepreneur exits. There's a lot of hurdles to clear with the opportunity zone. But one hurdle, the biggest hurdle in an entrepreneur's life is getting liquid and doing that the right way and getting the price you want. And the opportunity zone certainly helps clearing that hurdle.
So I do have a couple of questions that have come in through here. So if you guys have questions about the opportunity zones, that maybe you've heard some rumors about it and you want to ask some of those, you can do that. The first question is coming in here from Skylar. He says, is it true that you can't take profits from an opportunity zone for 10 years? Meaning that if you invest in the opportunity zone, that you can't take profits for 10 years.
To get 100% benefit, that is true.
So even if you're having somebody paying you rent, you still can't take distributions off the cash flow?
That's correct.
Okay. Who do you use to create the opportunity fund?
Now you could on that say, okay, this part of the distribution is not profit. There's some accounting rules here that you could apply where you could take some of that distribution that is not considered, quote, profit.
Mm-hmm. It's kind of like a different. So you might have a property that's partially invested into an actual zone or something like that. That
would be one. That would be one way of doing it.
Yeah. Next question is, here's a follow up from Skylar. So he's saying, investor buys a business, allows the owner to keep operating, and then when the owner leaves the business, the investor has the property. If so, then what?
Well, the investor has the property essentially the day of the closing. Now, they may choose, and this is something we're seeing over in this opportunity zone with this entrepreneur, they may run that business there for 6 or 7 years because it is producing enough profit that gives them the correct ROI for what they're buying. And you got to understand from the investor's viewpoint at this time, they're not trying to look for a 5X, 10X, whatever. They're looking at it like, hey, this is great. What we paid him, we can amortize out, and we're getting it at no real cost of capital to us over the long term. So that's going to be a decision by decision. Do you do the McDonald's where you shut it down overnight and say, forget it, we're just going to do the property? Or does the entrepreneur stay on for 3 years or 1 year? What happens if the entrepreneur decides after 6 months he doesn't want to stay? The great thing about this, and I've experienced this many times, is the entrepreneur stays 6 weeks, he gets mad at new management, and he leaves, and the new management is fearful. Oh my God, this person just walked out the door. Well, this gives the hedge fund a lot of security, knowing, well, if everything goes south with it, we still have the opportunity zone, and that's what we were originally after. And that is a big, big way to get a yes on these deals that you wouldn't get otherwise. Many times when we don't get a deal done, the buyer will come to me and say, the business is too much him or her. If they leave, we don't have a business. So I'm really excited about the exit opportunities here.
Are you familiar with any of the related party rules around opportunity zones?
Not enough to give advice at this point to an audience. I know you've got a expert, and I was on the webinar, and I thought everybody should listen to that webinar. And I thought he did a really nice job of laying it out, where I'm going to, Dan, I see my role in the opportunity zone is in finding these businesses that are in it and seeing if they can have an exit to get out. Mm-hmm. That's going to be my specialty in it. And today, anything we need to be a specialty, even within a specialty. That's what I'm seeing people being successful today. So I know you've looked at it. Do you want to elaborate on that?
So I'm not really familiar with what he's referring to as far as the related party rules. That's actually new to me. I don't think we even discussed that in the webinar, but I do have some extra knowledge, and I also have his information here. I'm going to put it into the chat box. So for those of you who are interested in watching that video that we did with Chris Grinzig on the Opportunity Zones Explained, it's one of our most popular videos that we've actually done on as far as one of our webinars. So you can check that out on our YouTube channel there. And if there's any questions that you're not able to answer, I'll try to do my best to answer them too, because I've done quite a bit of research on some of the more finer, details, behind the scenes. I'm not as well knowledgeable in your space as far as the businesses and stuff, so that definitely refer those over to you. Mitch has a question of, I have a property selling this month. Who do I use to create an opportunity fund and bring in some of my other 1031 investors?
Is it in the opportunity zone?
I'm assuming it is.
I'm assuming it is. I'm assuming it's in the opportunity zone. Well,
actually, I think to clarify this from what I'm reading it, he has a property that him and a couple other investors are in, and they want to 1031 that money, but instead of 1031ing it, they want to create an opportunity fund instead to be able to deploy that in a zone.
Yeah, here's the deal with opportunity funds. They're everywhere, and many of them already have as much as $2 billion.
You don't have to create your own fund if you don't want to.
You don't have to create your own fund. You can Google it. Morris, Manning, and Martin in this town has a $2 billion fund right now. What they need deals, and they need clarification on these on the opportunity zones. So they're sitting there holding money. There is no shortage of opportunity zones, because look, the value proposition is real simple. Do you want to send your money to the government, or do you want to put it in an opportunity fund? I've sold 2 businesses now, and both businesses I sat down, and before I left, I wrote a big check to the government. And that's what I always advise entrepreneurs. Don't write it at the closing table. Write the check at the closing table. Well, now I have a different story. I go, well, don't write it at the closing table. Write the check, but send it to an opportunity zone fund. And so with that kind of value proposition, funds have popped up everywhere. Here in Atlanta, the one that's they had a meeting a couple of weeks ago, and they had 350 people turn out for it. And many of them in the audience were hedge funds managers. But that's not the fund's not the problem. It is finding the deal. And I went to those guys and said, I've got you a deal now. You should look at this as not just an opportunity zone. The biggest hesitancy they have right now in buying properties is all the rules that surround it. So this gives them a chance to be the first in, because when the rules come clear, that property may be going for 4 to 5 times more than what he's getting right now. So the hedge fund, just by the very nature of their name, they're hedging. They're like, let's go ahead and buy this, and and hold it and make some money and keep the business there until we get until we get ready to deploy the capital.
Do you think that with a lot of these hedge funds that are starting these opportunity funds and stuff like that are out there that have $2 billion or so in their accounts and they're looking to deploy it in opportunity zones, do you think there's an opportunity to be able to help them find those deals by going and buying some of those properties and then selling them to those hedge funds? Obviously, you wouldn't be taking advantage of the opportunity fund and zone, regulations or whatever. But do you think that's an opportunity?
Yeah, these guys, the hedge funds, they just like the company I'm talking about, getting 4 to 5 letters a day. They have tracked. It is identified. Every opportunity zone is identified now, and the best way to find that in your region or area is go to the county government. By the way, the county government has excellent details on where the opportunity zones are. And let me just say this: one of the things we learned while Tim's business is in the opportunity zone, across the street, it is not an opportunity zone. He just happened to be on the right side of the street. And some of this stuff is carved up pretty well, Dan. It's not like this whole zip code is opportunity zone. And so you have to be very careful.
You could be right across the street, and it would be, and then on the other side of the street, it's not.
It's not, absolutely. We had this in this case. We looked at it. I remember in the county office, and we were looking at it, and we were like, are we on the right side of the street? And we had to kind of turn the map the right way. And fortunately, we were, but right across the street. And it's not always contiguous.
Yeah, I'll actually, let me do this. I have on the screen here kind of a snapshot of this map here that you can go and actually explore it. This is from that webinar that we did from Chris Grinzig. He did an amazing job doing that. I'm going to do this actually while we're doing it. So there's actually a website that you can go to that will allow you to kind of get very granular down to exactly where your property is. And let me see here. Actually, I think it's right here. Yes, let me share this on the screen so you can kind of see what we're talking about, because it'll make more sense once you actually see it. So on the screen right now, you should be seeing the map of the United States, and this is a interactive map, and you can see all these little red spots and dots. These are all your opportunity zones, and it's an interactive map so you can move it around. And so I'm just going to go where we're located right now, which is in Columbia, South Carolina. At least I'm located here. And you can see in the United States, in South Carolina, all these red spots, as they're getting more granular, it's telling you exactly where it is. And I actually have looked into this, which is why I kind of know what we're talking about here. And if we get really close in here, this place right here. So this is my office is a little bit over off of the street over here, but I have a medical office that actually sits right over here. And I was really excited when I was first zooming in until I found out that actually the other side of the street, that it's actually the opportunity zones. This is the major interstate. I-26 comes through Columbia. And this is the 378 Sunset Boulevard. There's a hospital over here. And this is the area. There's a kind of a rundown hotel down in here and all this kind of stuff. But it's not in the opportunity zone. It's actually across the street. It's over on this side. And so these are all selected, like you said, Cliff, by the state. So the federal government put this program in place and gave it to the states to select those opportunity zones based on criteria that they gave them. And so you can use this map. You can see on the top right-hand corner of the screen here where you can find it. It's eig.org/opportunity zones, or you can just do what I did and just Google opportunity zone map, and it will be in one of those top things. And you can dial down straight to your location and kind of see exactly where those opportunity zones are. Some of the opportunity zones you'll be surprised and shocked about, and some of them you'll be like, well, why did they include that area in the opportunity zones? But it was one of those things that was brought up very specifically to them. Is there do you recall if there is a time frame of when you have to be able to have one of these created, or is it still right now just kind of open?
It's open right now.
Yeah.
And the biggest risk to the opportunity zone is a change administration. This is a very lucrative program for people who owe a capital gains tax. And so while it is open right now, you have to look at this and say, change administration, which is probably, even if there is a change administration, obviously this is the law of the land. They would have to change it. But what we're finding, hedge funds just put that as a risk factor. An individual investor would have to consider that pretty greatly because it could have such a big impact. So we're finding the best buyers right now are the hedge funds because, in the scheme of things, that's not as big as risk factor as it would be for myself if I were buying in this. So we're finding the hedge funds to be good buyers. I really like this website. It's very impressive. If you do find one on there, I would still go down and verify it with the county government just to be double safe. The last thing you want to do is think you're buying a opportunity zone. There's some catch. And at least in the county government we checked, they had all of the opportunity zones up on a poster board, and what was circled. They had done, the county government had done a lot of detailed work on finding the opportunity zones.
One of the questions that came in here is that this person, Mitch, owns multiple apartments in the opportunity zone or in a opportunity zone, and he would like to roll it into an opportunity zone fund. Is that possible?
Yeah, you could do that. One of the big rules of opportunity zones is if it has to be 50% of the rehab price. So just because you're in the opportunity zones, there's some ands, ifs, and buts. There's no way to describe this, but a lot of ands, ifs, and buts. And here's what I did, Dan. My CPA, I think you may have worked with John, but John is my CPA, and I gave John an assignment. I said, look, I want you to learn everything you can about opportunity zones in the view of the accounting world and in the view of the IRS. I want you to come to me like the IRS would and really study this. And he's going to do a report for me in a couple of weeks. He's going to give me a report. There's so many ands and ifs and buts on this. We have to look at it like this. We don't want to get into one of these and find out one of the ifs and buts and ands canceled it out and makes it undoable. So, the big answer to that is yes. The detailed answer to that is just make sure it's just not he's got two big pieces of it. He's got an opportunity. He's got something in an opportunity zone. He can start a fund, but those are the two pillars. Just make sure in between we don't get canceled out.
And one correction, just because from what I'm familiar with, is that whatever you purchase the property for, you have to put in at least equal to or greater than the amount that you actually purchased it for, minusing the land. So, for example, if you had a $10 million property that you purchased, then you have to put in the land would be, say, 20% of that 10 million. And so you'd have to put in at least $8 million worth of renovations into that property. And that's really where these properties a lot of times are more land plays than building plays, but there are some opportunities in some of these buildings that you could, possibly level them and build up and stuff like that. But you definitely want to make sure that you follow those regulations and stuff like that, and use that 80-20 rule when you're trying to figure out how much you have to put back into the property for the opportunity zone itself, and that you also have to rehabilitate and use those funds for rehabilitation within a 30-month period from the date that you purchased it. You do have timelines and as far as how fast you have to do those renovations. And there are also, if you're thinking about creating your own fund, I would definitely seek legal advice for that, because there are also some additional nuances that if you can put the money into an actual fund, but if the fund doesn't actually put it into an actual asset, there's some fees that might be charged for you and stuff like that if you don't actually deploy the capital properly. So the easiest thing probably would be just to invest maybe with another group that has a fund already. That would be the easy button route. So you could definitely do that. I did go ahead and post, Cliff, the interactive map link for everybody to be able to use if they wanted to jump onto that website and kind of have a superficial look on what they're doing there. So a couple other questions coming in here. Can you give an example of how the money can be paid out of the project during the 10 years without it being a profit, et cetera, like fees, et cetera? From what I'm familiar with, Gail, and I think Chris could probably clarify this with us a little bit. Chris is the one who did the webinar on the opportunity zones. Is that I'm pretty sure that you can take distributions off of the property and still be paid off of that, and maybe some other fees and stuff like that. The biggest thing is the capital gains. So that whenever you sell the property and stuff like that, those capital gains are being handled a little bit differently and stuff like that. So I'm not the expert when it comes to that piece yet, but I'm working on that. So maybe we can ask Chris to get some clarification there too.
Yeah, that is one of the many things. I mean, and just like you just said, it's 80% for the deal you were talking about. With the exit of the business, they had to do a rehab of 50% because they already had 3 acres. So when you minus the land, it went down to 50%. And the reason I bring this up, a lot of this is by the opportunity zone property itself. Mm-hmm. And what has happened, there is a big blockage of deal flow right now in opportunity zones. Why? For everything we're just discussing, and figuring out the rules. And where we got some traction with the hedge fund to pull the trigger on a deal is say, yeah, we got to figure out all these rules, but you have a business here turning a profit in opportunity zone. And that kind of levels a lot of the regulations and go ahead and buying it and lowering your risk. At the end of the day, I got a profitable business in an opportunity zone. So without that, just on the property itself, we've seen a lot of deal flow being stifled trying to figure out the rules.
Bethany has a question here about what about people who hold property already in those opportunity zones? Do they have to do something different to take advantage of those businesses or those benefits? For example, do they have to set up a fund and then sell it to the fund, or file some paperwork and blah, 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 blah? I'm not sure what you've gotten as far as that information, Cliff, but I'm pretty sure that if you have a property, you can't sell it back to yourself. You have to somehow it has to change hands in order for that to happen. So I don't think you could just create an opportunity fund.
I wouldn't do that. I wouldn't do that. We did get it approved that for this business that's selling to the hedge fund, mm-hmm. they could reinvest in the opportunity zone. They could take their capital gains, and we had to get specific clarification on that from the government. But no, that certainly wouldn't. I'm confident enough to say, knowing that they would throw a red flag on that.
I think it would defeat the purpose of why they created the opportunity zone.
Yeah, right. Exactly. I wouldn't advise that at all. I would say if you got property in the opportunity zone, and you want to sell it, just remember, don't let the investor look at it just as a real estate play, but this is also a potential business that they can turn profits on until they do get ready to execute the fund.
So technically, you would still be able to make money off of the business inside of it. So you still make money off the business. You just can't make any profit off of the sale or off of the actual asset itself. So just like these apartments, you can still make money off of the apartments, the tenants paying rent. You just can't make money off of the sale of the asset until after 10 years.
Yeah, and I tell you, when we brought this to the hedge fund in New York, their eyes really sparkled when they realized that they were looking at it only as a real estate play, and they said, we actually can make money here on the business itself. Absolutely, you can do that.
If an entrepreneur is doing well in their business, comes from Skylar Vincent, why would they sell it to someone and keep running it?
Well, he's 57 years old. He's been doing it since he was 28. They want to go on and travel and
they're not going to get this. They're not going to get this high of a price for their property any other time.
Well, and 2 years ago when I went out there, we shelved it. I just said they said, look, we'll just keep running our business if that's the only amount of money we can get. So there's a threshold there for entrepreneurs to say, yeah, it's at a price point now. I got enough money in the bank that I can do what I want to do. So that's why they make an exit decision.
Devin has a question here about what is your approach to an entrepreneur in an opportunity zone to sell their business? How do you make money in the deal? What are your fees?
Well, my fee, maybe I should go up for opportunity zone funds. But no, maybe my fees to this particular entrepreneur is the same as it would have been 2 years ago if I would have advised them to go to market. The way we do it is there is a retainer, and then we do a financial evaluation on the business and justifying what we're asking. You never want to go to market with just a kind of whimsical number like, I'll take X million for it. You want to go and say, here's the model and the justification for what we're asking. And then we go and find the buyers. And then when there's a sale, we get a percentage of the proceeds at the closing table. If we never get to the closing table, we don't. And that's why I'm careful before we go out, because I don't want to be out there trying to sell things that's not going to sell. That's not doing anybody any good.
And another question that came in that was kind of along those same lines is, I have several properties in opportunity zones that I would like to sell. What would be the best course of action to sell these to a fund?
Well, are they properties or businesses?
They're probably properties that have a business in them. I'm not really sure. Maybe you guys, whoever asked that question, can clarify that.
If you're in an opportunity zone, and I mean, this business that we're selling,
properties is what they said.
What they say, rental
properties.
Yeah,
an asset and there's a tenant paying
I'm a little surprised. No one is. They probably have gotten some letters, we'll buy your property. But of course, those come from all different types and all different directions. I think at this point, it's a little bit difficult with just a property because the deal flow has been stifled. You got a lot of money looking for deals and not pulling the trigger. Now, I think, Dan, the big breakthrough was if you got a business on that property like we do, and you can make the case, you're buying a profitable business. So you're not going to have to eat that cost of capital on day one and wait. So on the properties, I would contact some of the hedge funds that are doing this, the opportunity zone funds. You can Google it, and many will come up. I would look and see if there's one in your state. That would probably be the most likely one, is one in your state. But I think we have to be aware that the money right now has been stifled just for properties. We're going to do this transaction with this business if depending upon no major catastrophe happens. So I'm a lot more optimistic right now with businesses and opportunity zones than just property.
Do you know if there's a time limit for the funding of qualified opportunity funds to deploy the capital into the actual opportunity zone business or real estate project?
The number I'm hearing and in reading is 3 years, but I would get I would get my CPA to focus on this and come back and have a report for you on all these questions. Because the way the IRS looks at it is sometimes different than the way we would read it. And there is interpretations in those rules. You know, this was put together by your, Dan, your Senator Tim Scott in South Carolina. And one of his Democratic colleagues in the Senate, I forget his name, but and they passed this with a lot of rules because both sides were skeptical of each other. That's all I can say. So even myself, I got my CPA going through, who fills out my taxes, who signs my taxes, going through and looking at this and coming up with the rules on it.
Well, and there is also on that link that I provided for the map, there's also a few frequently asked questions on there, but definitely making sure that before you move forward with anything, you're talking to your proper, I would suggest even a tax attorney, even more than an accountant, but the accountant and the tax attorney need to be talking together and verifying a lot of these things, because it's definitely something you want to get some better clarification on. The next question here is, do you think opportunity zones can push out local investors in that market? It seems as though this policy could create bubbles in markets that are already struggling. This policy sounds good as a short-run stimulus to struggling areas, but the long-run implication seems a bit disconcerting. Large institutional investors weren't considering these areas to begin with. Policy changed that.
Yes. I mean, this policy was created not only for Tim Scott, but I tell you who was some big supporters behind it was Michael Zuckerberg, who sells about $100 million worth of Facebook stock at a time. Can you imagine the check he has to write the government? The founder of DocuSign, all of these people, the big people with capital gains tax, this was Silicon Valley in South Carolina. And it definitely favors the larger institution, the larger wallet. We have local investors here in Atlanta that I know very well. And I went straight to New York, to the hedge funds in New York, because the decimal points are just different, are in different places for the two. And, I got to do what's best for the entrepreneur and get them the most for their business / property. So, yeah, this is a big boys game.
So Mitch's question here is, I'll probably take this one for you, Cliff, is maybe
Sure.
Now is a good time to lease option apartment buildings in the opportunity zones and sell to a hedge fund. And the only problem with that is that I don't see that you would be able to do a lease option to a hedge fund in these, because they have to actually buy the asset, and they also have to actually put money into rehabbing the asset too. So I'm not really sure that the lease option would be applicable there. What do you think, Cliff?
I especially, they're being tough on the rehab part of it too. You described the 80-20 or whether it's 50-50, whatever it is. So if they don't own the property, they're not going to rehab it.
Yeah.
Right. So I think that would not work. I think they're, for the small investor, not small, whatever. Look, I'm not a New York hedge fund, but I'm getting a deal done because this business. I would look at, if I were not a big fund, I would be looking for businesses that might sell in the opportunity fund. I think that will give people some opportunity that's not in Silicon Valley or a large hedge fund.
Do you have anybody right now that you know of that is wanting to sell their business and like that, so that there's opportunities? Or is it really like, if you have an opportunity, if you have a business that has an asset in opportunity zone, that's really your sweet spot?
Yes. That's the sweet spot.
Okay. There's no real play of going and buying these businesses and then selling the asset to the hedge fund, or does it just depend on who gets there first?
Well, I think, obviously, and this particular entrepreneur was a member for 3 years. They knew me very well. I had told them not to sell their business 2 years ago. So I don't think entrepreneurs are just going to say, yes, sign me up. I mean, some of the things converged for this particular deal. But I think if you call up a business owner and said, your business is in an opportunity zone. We got another one in Alabama. We got a member in Alabama, a textile company that they got 1 million square feet sitting right in the middle of an opportunity zone in Coleman, Alabama. So that, I think you got to come with some credibility to the space. But there is a case to be made here, because hedge funds, guess what they want to do? They want to deploy capital. They get penalized if they don't deploy capital. Now, they don't want to deploy stupid capital, but so I think I think there's a case there to be made for a business to say, you got an asset, let's let this asset do its job, and move forward. And of course, this business I'm talking about in Atlanta, they've had a long track record for 30 years of producing a profit. It's retail stores. So that's what I would say, Dan.
There's other questions about the 10-year capital gains tax elimination. To take advantage of the 10-year capital gains tax elimination, does the investment have to be capital gains transfers from other investments, or are cash investments also eligible? I would assume you could do both, because if the cash has capital gains tax built into it, instead of paying that capital gains tax at the end of the year, and you already have the cash, instead of paying it in, you could put it into a fund, I would assume.
That would make sense to me. I mean, I don't. The main thing
is, classified as capital gains, it doesn't matter.
As long as it's capital gains, it doesn't matter. Yeah. If you got a capital gains, and believe me, before the Opportunity Zone Fund, as I said, you wrote the check basically to the government. But I know there were a lot of people saying, oh, well, I can get you your lower taxes. And I always told entrepreneurs, they lower them in one place and increase them in another. They basically had it where if you sold a business and got a capital gains, they were going to get their share.
Skylar has another question. It says, if the way to provide value to opportunity funds, or these hedge funds that have these large opportunity zone funds, is to buy properties and then possibly sell them to the fund. That was my proposal earlier. It's just because maybe that's an opportunity. Why wouldn't the fund go buy them themselves, even by paying a little over asking? I mean, I would say there is that it depends on who gets to them first. I mean, if there's a bunch of people trying to get the asset, yeah, you're not going to be able to pay as much as they're going to want to pay and actually make a profit off of it. At least I wouldn't think so. But if you could get to some of these opportunity fund properties beforehand, and there are a lot of assets and a lot of people that own assets in opportunity zones that don't even know what opportunity zones are. They don't know what these zones are. They've never been approached about it. And so I think that's really where the sweet spot is. But I think, and you can kind of, give me your opinion, Cliff, but I think by the end of 2020, middle to end of 2020, there's going to probably be very, very slim pickings left of these opportunity zones or funds, or not funds, the assets within these zones. I think they're going to be gobbled up pretty quickly.
Yeah, we're waiting for the major land rush on this, the gold rush, and it's kind of
clarification happened last year, but I think this year is the year when it's going to really probably be, like you said, that land rush.
And then you also got people who are in the opportunity zone. They're a little hesitant because they go, I don't want to sell it for 4 times when I really could hold it and get 8 times next year. So everybody's a little bottled up, but Usually, you're right, Dan. When it starts to break, the herd goes all in one way. The hedge funds will say, "The heck with it, I'm buying," and the sellers go, "The heck with it, I'm taking my profits on the table," and go with it. So, I would say by end of 2020, it's going to be slim pickings by then. Yes, I would agree with that.
So now is the time to really capitalize if you can. The last question that I have here that's coming through, and if there's no other questions, we can wrap it up a little bit early, but I have 3 buildings in a row with a business in only one of the buildings. The rest are apartments, 17 units. Would the funds be interested in only the building with the business or all 3 buildings together?
Well, right now, I mean, with the kind of lack of deal flow, they would probably be interested in all 3.
You keep the business and just sell the building and asset off to them.
And if you did that, that would give a little worry to them, what kind of business you could, who's going to be between them. I think the cleaner deal is to sell the whole thing. It wouldn't be impossible to do, to sell the 2 rentals, but just knowing how they think and work, they don't want, what you've done is create an unknown. If you buy 2 and leave 1, you've left an unknown. And one thing Wall Street likes, what is the one thing Wall Street likes? Certainty. People don't understand, but Wall Street's one of the most anti-risk places in the world. They like certainty. And, even Netflix yesterday came out with all kind of astronomical numbers, and, Wall Street looks at it and gets nervous because they're basically anti-risk.
Well, there's no other questions that have come through. Thank you guys so much for all those really good questions around opportunity zones. Thank you, Cliff, for being here. If any of you are interested in reaching out to Cliff, what's the best way for them to reach out to you if they have further questions, or maybe have a business that they might want to be able to have you help them with? So what's the best way for them to get a hold of you?
Well, as you know, Dan, I sold Oxford Center last year. So I have a new company. It's Cliff at cliffco.com. Cliff at cliffco.com. That is CLIFFCO.com. So Cliff at cliffco.com is the best way to get in touch with me.
Cliff at cliffco.com. So check the chat box there, Cliff, just to make sure I typed it in correctly. Is that correct? Can you see that?
Yep, that's correct.
Okay, so that's how you reach Cliff. Cliff Oxford. Reach out to him, and he can always jump on a call with you or respond via email, or however is the best way that he wants to reach out to help you as best he can. Thank you so much, Cliff, for sharing your knowledge here and providing us. Any last parting thoughts before we go?
No, I think, find out. If I were an investor out there, I would look at it and find out what businesses, what operating companies are in the opportunity zones, instead of just what properties, what operating businesses. And I think those are going to be the first to sell.
I agree. Well, thank you again so much, Cliff. I hope you have a good rest of your morning, and we'll be in touch soon, okay?
All right. Thanks a lot, Dan. Appreciate it.
Bye-bye. All right.